Good morning, I'm Clinton Griffiths. The Packer margin squeeze is cutting into cattle slaughter right now. Fed cattle slaughter last week was estimated to be down about 7.5%. That's compared to last year. AgDay's Michelle Rook joins me. And Michelle, this is happening as we continue to see near to record cash cattle prices.
That's right, Clinton. Beef packer margins have continued to run in the red and below pre-pandemic levels. And so for the last several weeks, packers have been trying to slow chain speeds or slaughter rates to prop up box beef values and get their margins back in the green. Last week, slaughter for steers and heifers and excluding cows was estimated at only 455 to 460,000 head. While this reflects tighter cattle numbers, it's also a function of packer kill cuts, as processors eliminated Saturday slaughter in 2023 and are forced to run lighter slaughter schedules on Mondays and Fridays. Gross margins are putting a squeeze on fed cattle slaughter.
I'm disappointed in the slaughter level. I think that, the question would be, are you killing the available supply or are you not? If the weights were continuing to downtrend, I'd say, well, okay, no problem. The USDA is off. We don't have enough cattle. We don't have all those cattle. But if the weight's trending the other way, I got to be a little careful.
In fact, fed cattle weights have climbed counter-seasonally with the sharp pullback in slaughter and warmer than normal weather in the Midwest. USDA data for the week ending March 2nd had steer weights up 5 pounds from the previous week and 20 pounds higher than a year ago.
That's the overhanging negative factor we have for sure. When every carcass is carrying 20 extra pounds than it was a year ago, that's a pretty large number. So we've got good feeding conditions. We've got cheaper corn, and we don't have a bunch of closeouts that are really green and profitable, making money. There's some of these cattle feeders are losing some money here, even with some of these prices, because the feeder calf prices were so high.
And fed cash prices traded at near to record high prices last week, with the South at 185 to mostly 186. In the North, dress prices ranged from 294 to 301, and live prices were also in record territory.
There was a little 188, some 189. There was, some small regional trade that did get some 190. So there's a few regionals that are really scrambling after cattle.
The higher cash prices have also cut into packer margins and added to their desire to slow slaughter. At the same time, high cash prices incentivize producers to feed to heavier weights, a trend that could eventually hurt spot prices if cutouts falter. I'm Michelle Rook reporting for Ag Day.